What's going on, traders? Welcome to the channel. My name's John Scroot. We trade options here. So, three things to cover today. Closing trade in Netflix, 65% profit target has been hit. And then also AMC opened up another new trade there, but I'll explain the returns on that. It looks good. It was well worth taking the risk on this trade. And then lastly, let's talk Tesla, the trading style, kind of the approach, and why I prefer this type of semi-passive income type of trading setup. So let's dive in. All right, we are in Tastyworks, and let's show you Netflix here, NFLX. And what had happened is 426, so this was about 20 to 25 days ago, ended up opening this trade. I sold a put credit spread, the 490, 480 put strikes, took on $225 of credit. And then here I ended up closing out at $79 there. So that's not too bad. That is a 65% profit. I woke up this morning when it hit and I was really happy with that. So this closed at about 6:48 a.m. and I think I woke up like 30 or an hour later and saw that. So that was great. But $146 in the account and with a profitable trade. So next new trade opened up here was AMC, and you'll see this again. Basically, cash secured puts, sold the 11 put strike, and I put up $1,100 of collateral. However, a couple things are present. I took in $120 of credit. This puts my break-even price in this trade at $9.80. So AMC is trading at $12.55 right now. It needs to go to $9.80 or lower for me to be losing money or break even on this trade. Now that's great. This is a really good return because what I'm looking at is basically about a 12.2% return on risk there, and that's well worth it to me. Everything else I looked at has been about 2%. So to get almost 10 extra percent on top of that is amazing. I'll take that all day long. It's a well worthy trade. The question might be, why not add more to that? Well, I'd like to do a laddering process, so I will consider this if we start seeing more volatility in AMC, and maybe I'll open up another similar trade. It may not even be at the exact same strike price, but that's kind of the basic idea. It's almost like averaging down or averaging into your trade and sort of spreading your risk accordingly based on that. Let's talk Tesla. Ooh, Elon. Uh, Man, Elon Musk will tweet and straight up move markets. The crypto crash has been crazy. Bitcoin has just tanked. Ethereum has dropped, both of them about almost 50%. It's interesting, and this also affects the price of Tesla. So with Tesla dropping yesterday in after hours, I actually bought one share for my long-term account. I'm not too worried about that in the long term. I'll just let that one ride out. But in terms of my short-term trades, my short to medium term in Tesla, this is similar to Netflix right here. I have two put credit spreads. They're built in at the 580, 570, 600, 590s. And Tesla just keeps teetering in between those. So it'll go in the money, out of the money, in the money, out of the money. And I go basically from positive to negative many times, but there's 29 days to expiration. So I'm going to let these ones ride out. They've got plenty of time for the probabilities to work out. And there's plenty of time for Tesla to have kind of good news, good catalyst built in. There is some risk out there though. The Bitcoin trade and issue could actually affect their Q2 profitability, and it could also affect kind of how the spinoff is on Tesla, which is I'm a little torn on because this is great for the long-term account because you can get more shares at a really quality price, or you end up losing on your short to medium term trades. Or the alternative is if they go up, everything goes up. Everybody wins in that regard in terms of my trades. We're gonna let that one ride out. We'll see how this plays out. This explains kind of my strategy related to Tesla as well as Palantir, which is another longer term trade that I do believe in here.